Earlier today, we got some big news around a stock that I've been accumulating over the past couple of months, and that is, of course, BMNR. We got a short report from Carysdale Capital. Now, these guys put out a whole long thread along with a multi page report around basically why people should be selling BMNR and why BMNR will go to zero eventually. So, in this video, we're going to break down the short report and I'm going to share some of my thoughts as well as some news around Ethereum and BMNR adoption that we continue to be seeing at an increasing pace. Let's jump right in. One thing I'll say straight off the bat is I haven't had a chance to read this report yet. I've been at work all day. So some of the thoughts are going to be just my gut instinct or my gut response to this news. We're going to read it together and I'm going to respond to some of these points. I also have a whole bunch of bookmarks around BMNR and Ethereum that I want to share. Let's start with the report. Carysdale Capital came out with this report saying we are short BMNR, and they have this full report on their page, which I was able to access. This is basically a 9-page report here that explains why they're short on BMNR. It explains that they're not a fan of digital asset treasuries in general, and they say that BMNR is copying a lot from MicroStrategy, which is obviously true. Let's first read this because it's much shorter. Carysdale Capital had this as their pinned tweet. This, of course, came out this morning. BMNR was slightly down on this news, but it did, of course, end the day 1% in the green. So it recovered off the back of this news. They say here that the digital asset treasury playbook has become basic and unoriginal, and as near identical copycats overwhelm the market. Premiums are collapsing, and the ability to issue shares well above net asset value to boost the Ethereum per share is disappearing. They continue here to say that competition is exploding. $100 billion plus in planned capital raises by firms chasing crypto treasury strategies has removed the scarcity that kept premiums high. Now, many trade at or below parity as their reflexive loops stall and their models crumble. The OG digital asset treasury MicroStrategy has seen its premium slide from 2 to 2.5x NAV to 1.4x NAV after unpopular financings and policy reversals broke the spell. So off the bat, I don't necessarily agree with this. Not necessarily that its multiple has fallen, but that it's fallen as a result of unpopular financing and policy reversals. Of course, the net asset value is just the premium that it has to the underlying assets that it holds. And that obviously is something that's volatile, that can fluctuate. And the digital asset treasury companies can adjust their strategy based on that NAV changing. The post continues here. If the pioneer with a cult following can't keep the magic alive, no one can. Tom Lee has proven to be an underwhelming meme lord. No cat videos, no speeches to mortgage your house to buy Ethereum, poor utilization of caps lock emojis, GIFs, AI slop, too tradfi and boring. Lee pales in comparison to Saylor and Chamath. So I know this is tongue in cheek, but this completely lost me. Now we're just not serious anymore. I'm starting to understand why the stock recovered. BMNR's premium has been sliding lower and lower and will probably continue bleeding until it's trading at NAV or below. The lower it goes, the slower the Ethereum per share accretion until it collapses below 1. The MNAV is 1.4x today with 40+% downside. This is just stupid. Like, I don't know what to say to this. Sure, I guess. Management changed reporting just as growth stalled. After August 25th, it stopped providing the NAV per share and share count, key data investors need and have demanded. If per share accretion was improving, they would be marketing it, right? Last month's accretive $365 million direct deal at a headline $70 wasn't what it seemed. Once you value the attached warrants, it was effectively a discounted cash grab dressed up as a premium raise. DATs are just pretty dumb. Yeah, cool. Thanks, Carysdale Capital. Really great analysis here. In what world can rando after rando launch shell after shell to issue equity endlessly to accumulate the same liquid tradable asset without all the shells trading down to a discount to their NAVs? I kind of regret reading this entire thread now. We're not short ETH. If you want ETH, just go buy ETH. It has never been easier. BMNR's whole pitch is to get investors to overpay for copying a playbook that no longer works. No strategy, no scarcity, no reason this company deserves a premium. So I have so many thoughts here. And some people in the comments already sort of responded to a couple of these thoughts. I mean, I saw one post, lower premiums to ETH make it more attractive to buy. If they dip below NAV, they can sell ETH to buy back shares, thus increasing the Ethereum per share count. They stopped reporting share count because it gives them a strategic and financial advantage. In one simple tweet, you can break down this short report. And I also found this funny. Carysdale Capital also had shorted MicroStrategy in 2024, and so they probably got their face ripped off on that one. There's a bunch of people that commented on this, and I have a couple of these posts here. So, first of all, they highlighted this guy who is the chief investment officer of Carysdale Capital Management. And they said he was arrested on a DUI. I don't really care about like his personal background. I'm not here to trash the guy. I find this part more interesting. They shorted Oklo back in November 2024. Since then, it's gained 575%. They shorted MicroStrategy in March 2024 when it was trading around $170. It's since gained 90%. They shorted IonQ back in March 2025 when it was $21, and it's since gained 266%. So, really, if anything, with compelling short reports such as this one, and with a track record like this is probably a bullish indicator for BMNR. Because these guys clearly don't know what they're doing. These guys are simply bringing up some points that can be disputed in a single tweet, and they're taking advantage of the publicity around a lot of these names. All three of these names are very, well talked about names, well covered names on the space. So I'm not really worried about the short report. I see Tanner here also made a post saying they clearly don't like story stocks. They prefer to invest in fundamentally strong businesses. And Tanner also did a Grok search around their previous shorts here. They had Joby, Carvana, Oklo, QBTS, IONQ, CoreWeave, MicroStrategy. And in every single one of these shorts, they've lost money because all of these have gone up in the last year or 2 years. Now, you could argue that, hey, Tev, this is a sign of the markets, and the markets are just absolutely on a tear. And so everything's going to go up, especially stocks that have strong stories and that are really talked about. I also like this post from Roy. He says, I understand their thesis, but the big issue is they picked the wrong target. And bitmine, like MicroStrategy, trades above the MNAV on a consistent basis, plus the cash and yield allows them some flexibility for those rare moments when the shares are undervalued to do a tactical buyback. If they were short another digital asset treasury, that might work out for them, but they fail to understand that the digital asset treasury likes consolidation, and as a result, bitmine is likely a long-term winner, even while others struggle to have the same premium. The only way this really works out for them is if we hit crypto winter a lot earlier than many are expecting. And the interesting thing here is that they mentioned in their last post in their short report that they're actually not bearish on Ethereum. They're bullish Ethereum. They just say if you want to go buy Ethereum, don't buy a leveraged play, which I get to some degree. In the case of bitmine, it is the largest leveraged Ethereum play out there. It's the number one treasury for Ethereum, which means that a lot of the liquidity is going to consolidate into that single name. They're going to suck up all of the volume of people who want to be in Ethereum space that don't want to just buy straight up Ethereum and hold it in their wallets. I don't agree with them when they argue that BMNR offers no unique value proposition. I think Tom Lee himself is a very strategic addition to that team, and that's reinforced by institutional backers like Peter Thiel and others. And it provides credibility beyond plain holding Ethereum. So I do think that that exposure plus the leverage as a result of those issuances, the dilution that they so eloquently refer to, actually plays a big role in the actual thesis of BMNR itself, which they clearly don't understand, because BMNR is currently over 2% of the total Ethereum supply, on their way to 5%. And how they're going to get there is by issuing more shares and by diluting. That's built into their business model in general. Yes, if the market dynamics shift and the premium is going to fall, the company can adjust accordingly to that. And yes, if there is a crypto winter, everything with regards to crypto and Ethereum is going to fall, not just BMNR. But I do think that BMNR is the best positioned digital asset treasury as a result of them being the biggest and the biggest accumulator. In addition to that, there's also a ton of macro catalysts. There's accumulation catalyst, which I highlighted in the past. There's a stablecoin boom. There's the Genius Act that's opening up retirement markets. There's a lot to be bullish on Ethereum in general. You see BlackRock buying up shares of Ethereum every single day, 200 million here, 437 million here. Bit Digital, 31,000 Ethereum worth over 140 million. Every single day you see posts like this. I saw this post around Uber CEO confirming their plans to accept Bitcoin and crypto payments. There's mass adoption that's coming for crypto, and Ethereum is going to be a big tailwind off of this. I saw this post yesterday, $2.7 billion worth of tokenized gold is now on Ethereum. Ethereum makes all on-chain assets high powered. Insiders say that the United Arab Emirates will allocate $15 billion to buy Ethereum in January. If true, that's equivalent to about 20 times the amount of Bitcoin El Salvador has accumulated since it started buying in 2022. You have to understand the massive amount of volume that is going to be flowing into Ethereum from an institutional level. And not only that, but sovereign wealth funds, entire countries diving into Ethereum just as they're diving into Bitcoin, companies adopting it for their payments. You see here Grayscale just kicked off staking for the massive $8 billion worth of Ethereum holdings. They've already moved over 150 million to batch staking contracts. This locks up supply, slashes selling pressure, and screams long-term confidence in Ethereum. Of course, the more Ethereum staking we get, the more that will drive up the stock price as it locks up more supply. I also saw this. SBET generated 451 Ethereum from staking rewards last week, which brings the total cumulative number to 4,723 Ethereum since launching the staking strategy on June of this year. The SBET treasury is 100% staked, generating $370,000 worth of Ethereum every single day. And as the value of Ethereum rises, of course, that also rises along with it. We know that staking is something that BMNR is also going to get into once they reach that 5% target. And not only is Ethereum itself one of the most lucrative opportunities right now, but we're seeing the daily volumes of bitmine consistently crossing MicroStrategy. Bitmine daily volume 3.91 billion versus strategy 3.29 billion. So you're seeing massive accumulation into Ethereum. You're seeing massive accumulation into Bitmine. I saw this as well. BlackRock promoting Ethereum, saying there's a big difference between Ethereum and Bitcoin. People want to play this potentially very disruptive theme. So this is entering into the mainstream. You're seeing adoption all over the place, and you have this beautiful technical pattern setting up for Bitmine here. And yes, I understand that as the stock goes up, the ratio is also going to go up. And yes, they're going to dilute more so as to buy more Ethereum. I'm not really worried about that because that is a feature that's baked into the digital asset treasury model. And that's something that we want as underlying investors because once they reach that 5% target and they start staking, they're just going to keep generating more and more of those passive rewards. And as they do so, they're going to lock up more supply. And as more supply is locked up, not just from them, but from everybody who's staking their Ethereum, the price is going to rise because there's going to be demand that far outstrips the supply. And so I'm bullish on the underlying Ethereum. I'm bullish on BMNR as the biggest player in the space and the treasury of choice from Wall Street and institutions. And I think this short report from Kerrysdale Capital is kind of laughable because it clearly underscores the model itself. They highlight in their first couple of paragraphs that they don't understand anything about digital asset treasuries. It's poorly written. It reads to me as something that's more for clicks than something that's a serious report that we should take seriously. They have a horrible track record with all of these other companies that they've shorted. And it seems that they just hate these growth stories in general. And they short these popular retail names, which again sort of reinforces that idea that this is just for clicks. They say digital asset treasuries are just pretty dumb. That's a direct quote. Pretty dumb. And overall, I just think it's intellectually dishonest because I can be bullish on a company or I can be bearish on a company. But in order for me to have an intellectual stance that's well informed, I have to understand what that company does. And I either agree or disagree with the underlying mechanics of how that company operates. But if I just discount the premise altogether, then I feel that's a little bit intellectually dishonest because you're not arguing the actual strategy itself. You're completely discounting the premise. It's like me saying, oh, SoFi is dumb because banks are dumb and therefore you should sell SoFi. Well, that doesn't say anything about the underlying company. It doesn't say anything about the industry. And it's just pretty intellectually dishonest. It's kind of dumb. It just makes the rest of your report fall completely flat on its face. And I mean, look, I showed you single tweets that can fit in 360 characters that completely break down the short report. That explained very succinctly why Bitmine has taken the actions that it already has and why that's actually beneficial for shareholders. And it seems to me that these guys just didn't want to take the time to do the homework and actually read about what they were coming out and shorting. It's very clear that the market saw through it, and I can understand why, because in a 20-minute video, everybody here sees through it as well. And I just think that it's just noise, in my opinion. Does this make me want to sell BMNR? Absolutely not. In fact, the opposite. It makes me want to buy more Bitmine, just given the track record that these guys have. Everything they touch turns to gold when they don't want it to. So, anyways, I hope you enjoyed that video. I hope you enjoyed, some of the posts that I was sharing with you around accumulation. I am incredibly bullish on Bitmine. It is something that I closed all of my cash secured puts on this run up that we had to $60, and I think we can go much higher than that. Ethereum is on the way back up. It's over 4,500. And like I said a few weeks ago in previous videos, I think October is going to be a very good month for Ethereum. I think the winter time is going to be very good for crypto in general because you have seasonal tailwinds. Of course, we're going to see how it pans out. Thank you so much for watching. Let me know what you think of the short report, if you think I missed something in my assessment of it, and I'll see you in the next one.